Okay, the live stream is okay. I think Dr. Muli is also here.
Hello, hello.
Hello.
Hello, Greg. I hope you can see me. I can see you. Okay, I think you're muted, Greg.
I link my videos on.
Now you're good.
Yeah, I link my videos on YouTube. I'm wondering if it's going to show ads if I play them in the video. It'll be a little bit annoying because yeah, no one wants to watch an ad in the middle of a lecture.
What I would suggest is if you want to play anything, you can play it between now and the time.
Yeah, I'm just downloading the video, so then it should.
Okay, because I had let's do the following. Anne, you're here.
No worries.
Yes.
Are we live streaming?
Yes, we are live streaming. You'll need to resume the recording. I had paused it. And
okay, yes.
Disable the waiting room and admit everyone who's in the waiting room for now.
All right, and is everybody muted?
No, not. I think you'll need to mute them once.
Okay, I'm going to mute all right now.
Yes.
Hold on. And Greg, you can unmute. Greg is already a co-host, right? Yes. Okay. Good. Perfect. Okay. Yeah. And I muted you. All right. So let's let them in, and then, well, Greg, if you don't have the video, we can play some EBU videos in advance, and then kick to you. Okay.
You broke up there, so I missed that.
Oh, okay. If you don't have the video downloaded yet, we can play some EBU material, and then or you can just, I'll give you the show, whichever you want.
Oh, I mean, it's part of my presentation, so the one's already uploaded. No problem.
Okay.
And the other one will be ready in like a minute or two. So I'm sure by the time we get started, we'll be fine.
Okay, so I'll just let the students in now. And admit all. Here we go. Okay, hello everybody. Hello, hello, hello. All right. Maybe, Anne, if you would just set the, let's not have the waiting room anymore. There's no need. I'll take away that feature. Did you already do that? Hello, hi. So Dorrington, I have had some very good news. You've been very helpful, so thank you for that. I had a conversation, Dorrington, with Lucy, who was very, very happy about the work you've done to help everybody with the creation of their smart contract and the launch of it. So thank you. All right, so I'm humbled. Oh, yeah, you're a humble person, Dorrington. Hello, Katiana from Luanda, Angola. Hello, Joseph. Hello, Hamilton. Hello, Hassan. Oh, you're Malindi. Oh, I think we can meet. Lucy, you're here. I just mentioned you. Hello, Boemo. Otieno. Hello, everybody. Inemesit he said from Nigeria, hi. And Mfo from Botswana. Okay, Doreen from Nairobi. Joel from Kigali, hello. Okay, Katiana, you can smile. I don't know, you look very serious. Thank you, that's better. Much better, much better. Thanks for putting your video on, by the way. Very good of you. Hello, Helen from Nairobi again. Loreto from Botswana. Okay, we're pretty well represented here, Greg. So we have a very good representation from across the African continent. Liberia, Joseph, hello, Joseph. And let me try this name. I'm not going to go for Patrick. I'm going to go for Bagirigomwa. Patrick. Did I say it correctly? Bagirigomwa. Patrick, right? From, okay, I hope I said that correctly. From Kigali. Oh, Katiana, you were reading something. That's why you're so serious. Okay, I get it. Okay, that's okay. All right, so we're getting there. We're still filling up. We still have people coming in. So we'll get started pretty soon. And then I will be introducing our guest speaker shortly. And then we'll be starting pretty soon. So I guess, Greg, we can just go a couple more minutes. Just make sure everybody comes in. So who else is coming in here? Did everybody manage, anybody stuck with their smart contracts? C. Dorrington. If anybody's stuck with their smart contract, C. Dorrington, he spent 4 hours. He's so patient. 4 hours he spent with Lucy and some others even, so even more time. Dorrington, you know you're not being paid. Huh? Let me just be very clear. Joseph, hello from Homa Bay. Angela Murungi. No, Dorrington, very gallant of you. He's a great guy, Delphine. Yes, he is. It's amazing. So, and I hope you guys feel the ability of what you can do, not only to have created the smart contract, but also to have launched it on a UI, on a user interface. Oh, yes. Okay, Lucy, we can vote for him. Hello, Lynette from Kenya. Right. We'll see what we can do with Dorrington. Been a great help. Thank you very much. So for those of you who are not in the course, this is our course on blockchain technology, applied blockchain technology, so actual application. And we'll be introducing our guest very soon, and then we'll get started. We have some people still coming in, so as they come in, we'll just wait a little bit to have everybody come in. Okay. Yes, Delphine, we know you're from Nigeria. Good that you're here. At least I know you're from Nigeria. Okay, Wycliffe, hello from Nakuru. And Baladia from Botswana, hello. Yes, Abdirahman, this is a webinar for all, right? Yes, you're in CPA 105, you need to be here. You're in the right place. Okay, you are in the right place. And Mason Taha from Lesotho. Earl from Ghana, we have representation. Thank you. Fiona from Kenya. Thank you. Emmanuel from Botswana. Earl, Ghana, we said. Okay. Emmanuel. Abdirahman from Somalia. Thank you. Welcome. Alex from Nairobi. How are we doing, Greg? Should we give me a thumbs up whenever you're
let's go. We're good to go. Yeah. Whenever you're ready.
Okay, we still have people trickling in, so I'll just, I think we're at the 5 point mark here, so I think we should get started. All right, then allow me to do one of two things before we get started here, Greg. We have 60 people here. We're gonna definitely hit the 100, and then they're gonna kick over into the YouTube streaming. That's where they'll be joining us. I'd like to also make sure that all the students who are present complete an attendance. So I'll just launch a little quick attendance poll, and then after that, I'd like to just give a 2-minute overview to those students who are not in the course, what we do, and then I'd like to introduce you, and you can take over.
Go for it. Perfect.
If that's okay for you. Okay. Delphine, are we looking for others from MSDA course as well? Yes, please. You can do that. We're waiting for quite a few. There should be quite a few people. So some of them may be streaming on, maybe joining us on the stream, but we'll be sending out the poll very soon. So let's get started. So welcome everybody to our applied blockchain technology presentation that's taking place today. Before we get started, before I introduce our speaker, we're very honored to have Greg Schneider here with us from Empower. And I'd like to say one or two things before I introduce him and let him take the floor. So some of you, of course, are in this course. Some of you have been engaging with us in the application of blockchain technology quite successfully, I would say. And what this course does here is look at this new technology. Essentially, we look at the basics, the understanding of the historical narrative, as well as the current application and impact of blockchain technology. And it's very, very important. Now, as an EBU student, we want to try and make sure that everybody here is literally and really on top of the latest and so on. So, blockchain technology, artificial intelligence, cybersecurity are the fields that we really look at, and in this respect, in terms of blockchain technology, we're happy to have somebody who's not only going to talk to us about how blockchain technology is applied in the organization known as Empower, but also perhaps how he got involved in the scene here. So I will quickly, while I have him tell us something about himself, I'll launch the poll so that everybody's attendance can be recorded. But not yet. I'm going to wait until we have everybody, because there are quite a few people still streaming in. So I want to just give everybody a chance before I launch the presentation poll. So welcome, Greg. Welcome to our European, I was going to say welcome to our chateau, but but we are literally not there. We're virtual, obviously. So welcome to meeting our students. Welcome to our forum. And how did you get into this space? Maybe you can tell us a little bit about yourself first, and then what Empower does.
Absolutely. So thanks, James, and thanks to all the students who dialed in, both on the Zoom call and on YouTube on the live stream. It's great to be in a room filled with other fellow Africans. I myself am originally from South Africa, born and bred, now living in Amsterdam, but moved here about 5 years ago. And I'm looking very forward to flying home on the weekend to spend some more time with my family back in what is a warmer South Africa than the kind Netherlands. So my journey into blockchain, I'd been interested in the space, as I think many people who grow up in emerging markets, developing economies. There's a lot of real world challenges, and some of them I'll be addressing in my presentation today. There's a lot of real world challenges that blockchains, offers solutions for. And so, when you start to think about remittance payments, when you start to think about, some of the challenges around corruption and surfacing data and analytics and giving that confidence and some of the informalities of the of income, etc. You see a lot of use cases for blockchain. I would say that our journey on Empower is an interesting one. The business is coming up to about 5 years old. I've been involved since we wrote the white paper, so almost since the outset. But we weren't and we aren't a blockchain business looking for a problem to solve. We addressed a very real challenge around affordable housing, and I'll get into that in a minute. Thought about how we could address that challenge around affordable housing and found that blockchain was the best solution. And I think that is one of the reasons why we've seen the bull markets and we've seen the bear markets and we've seen the crypto prices go up and down. Bitcoin go to 120,000 and down to 16,000, back up to 16, back up to, and we're still here because we're a business built on fundamental real world problems using a technology that actually solves those problems. We'll get into that obviously over the course of the lecture. Hasn't really impacted us. We're a blockchain business, and sometimes we don't even talk about the fact we're a blockchain business because it's not that interesting. A lot of what the other stuff we're doing is very interesting, and that's almost like saying I'm a business that uses email. Yeah, and we hope that that's one day where blockchain will become. It becomes this infrastructure that allows you to do things quicker, faster, better, but it's not. It's the rails on which the train runs. It's not the reason for existing. So yeah, I don't know if there are any other fellow South Africans. I heard lots of Kenyans and Nigerians and Somalians, etc. And have been fortunate enough with Empower to travel to many of those countries to explore opportunities. In today's call, we'll speak mostly about our work in Mozambique and Kenya, which is the two markets where we've been primarily focused on. And yeah, thank you for your time. And I will try to keep an eye on the chat. So if you do have any questions as I go, maybe you can add them there, and so we can make this a bit more interactive as the online presentation can be.
Excellent, thank you.
Okay. Should I share my presentation and get started?
Please, absolutely. I give you full powers. Do as you will.
A lot of responsibility. Okay, let me load up my presentation. Whoops, and share my screen. Okay. No, that's not going to work. Okay. Right. Sorry for the brief delay. I'm going to be showing a video in a 1 or 2 slides. When I do that, it actually, I realize now, mutes me. So I will stop sharing and reshare just before that slide so you can watch the video with audio. Okay, so the focus for today's lecture is really looking at blockchain for real-world impact and a real-world use case. And just to set the context, I'll give a little bit of background about Empower because obviously I'll be sharing some of the ways in which we've leveraged blockchain, some of the lessons we've learned, some of the challenges we've had, and some of the opportunities we've seen. And I think that will all make a lot more sense when you actually know what it is we do. So our mission as Empower is to enable rent-to-own finance for 1 million affordable houses in Africa by 2035. And now will be my time that I want to show my videos. I'm going to stop sharing for a second. Reshare.
Do you think you'll ever buy a home?
If I go to the bank, I know those people, they won't help me.
Wherever you are in the world, everyone's going through the same thing, a housing crisis. Here in Mozambique, it's so much worse because of 2 things. One, climate change is destroying the houses that do exist because the East African coastline is really prone to cyclones. And 2,
the interest rates are over 22%.
It's staggering. No one can afford a home.
The biggest problem is not that people are poor, but the problem is the systems.
I'm here to learn how blockchain and NFT technology can help conquer this crisis by allowing investors worldwide to help build affordable and sustainable housing for the developing world. This is the Grand Hotel in Beira, Mozambique. It was once the opulent playground of the Portuguese colonizers who robbed the Africans of their country for over 450 years.
Today, it's home to 3,000 squatters. You can see individual families living in each of the hotel rooms. It is the face of the housing crisis here in Mozambique. And over the next 15 years, the population of this city is expected to double. The housing crisis is only going to get worse. I'm looking around town to try and find some locals and to learn how the housing crisis has impacted their lives. So this is the local fish market, and this is how a lot of this community survives. How are you? This is good to eat? It's kind of salty. It's so interesting where all of these people work and where they live is so close. Like, this is the livelihood and the income. The homes are just out the back here. And when a cyclone comes, both are gone. What is happening here?
I'm fixed up engine here.
This is your workshop?
Yes.
It looks like your building survived the cyclone fine.
No, I not survived from cyclone. This is his new house.
If another cyclone comes, do you think this will survive this time?
No. It's not strong.
Hey, bud, what's your name?
My name is Tony.
Tony, Yusuf, nice to meet you, bro. So this is your store? Do you see a future where you would own a home? Do you think you'll ever buy a home?
Yeah, I'm saving little by little, I still have some money to bank account, but it's not that enough, Because if I go to the bank, I know those people, they won't help me,
Let's go and see my house.
I'd love to see your house, man.
Let's go together.
What do you do here?
I'm a workman.
So this is where you live?
Yes, come here.
I can see how this structure will not keep a cyclone away.
It's me that I do this for.
You built this yourself with your own hands?
My hands.
Wow.
This is my family, all of them, these ones. They suffered with the cyclone die.
What does the cyclone look like?
It was very bad. So, in 3 hours of time, everything changed. House is down, everything is poor as 4 hours.
Are the government supporting?
Which type of government again support me? So I lost my identity card, I lost my passport, everything.
I met so many incredible people here today, and they were all hustling and being incredibly enterprising. But it feels like no matter how hard they try to improve their circumstances, the system is against them. They can't get mortgages, they can't get loans, they can't improve their lives in a fundamental way, no matter how hard they work. And if the system is so stacked against you, you have to change the system. I've heard about an ambitious new development that's aiming to revolutionize affordable housing in Mozambique using blockchain.
Here we will build 150 houses.
150 homes?
Yeah.
And how long does it take to build a home like this?
1 month. 1 month. Here we have
so
one
nice
kitchen.
and cool here.
Yeah, here we have solar energies.
Oh, so this thing is powered by solar?
Yeah.
How many people live here right now?
40 families.
How much is a house like the one bedroom?
$10,000.
$10,000 for a whole house?
Yes. And there we have the hemp house.
Hemp?
Hemp house, yes.
It's really interesting the way you're thinking about different building materials.
This material for me is beautiful, is better because CO2.
Yeah.
When it can expand, this material can.
So this house in itself, out of its very materials, is helping to fight climate change.
Yes.
That's amazing.
Yeah.
Oh, this is the best bit so far.
Yeah.
I think it's really nice to see it from up here because you get to see a community.
This kind of housing is definitely revolutionary in the way it's built, but even as cheap as 10K, getting a bank loan is still way out of reach. But developer Richard has found an innovative way to shake up that system.
Wow.
How are you?
You can see the whole project from up here.
This is almost half of the entire project.
So I've met people that are earning $200 a month. How much is their repayment on a $10,000 house?
about $100.
About $100.
The biggest problem is not that people are poor, but the problem is the systems, the structures around them.
As a property developer, you need people to get finance.
Yeah, the 10 houses that we first put as showcase, we saw people would come, would send lists and lists to the bank, and the banks would not give them mortgages.
Just think of a mortgage. It assumes a regular income and a regular payment. Now, if you look in not just Mozambique, but I mean, Mozambique's a prime example, that's not how life works. For most of the developing world, income is informal. You're hustling for money because it's not a salary.
But you're still bringing in money.
The problem is it's not visible.
We need a new system. What is that new system?
Well, we're using blockchain. And the whole thing around that is that we're using NFT technology to digitalize that portion of the loan that then makes it liquid and tradable, and then the flows go back to that NFT. So it is a portion of the loan. Your NFT is a portion of a loan into a portfolio of affordable housing.
So when Richard wants to sell a new home in his development, Glenn's company funds the loan through the sale of NFTs, cutting out the banks entirely. So NFTs are a loan for hustle culture.
Exactly.
Yeah, absolutely.
Exactly. If we're going to really address this problem, we have to address it at scale. That means we've got to raise billions of dollars. This is a business opportunity, a significant business opportunity. This is $1 trillion business opportunity.
I've been invited to house number 99 to meet one of the families that live here. Hi.
Hi.
How are you? My name's Yusuf.
My name is Philomena.
Wow, this is your home.
Yes, this is my home.
This is so cute. This is your kitchen. No, my kitchen is not this organized, that's for sure.
Okay. E aqui é um aparador.
This is you?
Yes, I am.
Graduation.
Yes, I am nutritionist.
Walking around Philomena's house, I can see firsthand how Casa Real is helping families on the ground. I've now been invited to sit with Philomena and her siblings for a traditional Mozambican meal. Oh, this is so nice.
Yes, it's beautiful.
It's so beautiful.
Yes.
How long have you lived in this house?
Vamos já 2 meses.
Oh, you've only been here for 2 months?
Yes.
It feels like you're so much more settled in. You've done all the deco, you're cooking massive feasts. Yeah, I've met so many young Mozambicans, and when I ask them about if they'd ever own a home, they say impossível in Portuguese, impossible.
Possível ter uma casa. Eu ainda tenho uma casa. É uma coisa muito boa. Graças a Deus. É uma bênção estar aqui.
Colonialism, civil wars, and cyclones, this country's been through a lot. Everyone deserves a home. And it's been so interesting to learn how blockchain technology can help finance that. Right now, they're basically houses. They're made of beams and walls. But as they fill up with people, they become full of dreams and love.
Okay. Can you guys hear me? Let's just go with this. Okay. All right. Hopefully you can hear me again. Yes, excellent. Okay, thanks. That was a video done by Coinbase about us and about what we're doing. And hopefully, I'm sure sadly it resonates with many of you on the call who are maybe struggling yourselves to get access to a house and know the challenges of housing around the African continent. So just to very briefly summarize, one of the biggest challenges that we're trying to address is the formality of a mortgage and the realities of housing across the African continent. As you can see here, mortgages are almost non-existent in some African countries. Countries like Mozambique, 0.67%. I mean, this is a stat that always blows my mind. In Mozambique, there are around 31 million people. And before we entered the market, there were only 600 home loans. And these ridiculous numbers exist across the continent. In Kenya, there's around 55 million people, only 27,000 mortgages. So really, the mortgage market is fundamentally broken. And as Glenn, our CEO and co-founder, explained in the video, it's because a mortgage, as we will all know, is a formal financial instrument that expects a fixed amount of money to be paid every month on maybe the 25th of the month for the next 20 to 30 years. And when people earn informally, It's very hard to commit to that regular payment for such a long period of time. It is not that there's not funds available to pay off a home, it's that the structure of the product is fundamentally misaligned with the realities of people on the ground. And when you look at informal income across the African continent, and in this graph, the orange is informal income, you can see in most countries, a significant portion of income is informal. Around 85% of income across the African continent is earned informally. So how do you combat that with the correct financial instrument, and then how does blockchain support that? And that's really what I'm going to be highlighting in the lecture today. So just to summarize, 85% of income is informal. Around 3% of the population therefore qualifies for a mortgage because there's just not enough people are earning in a formal way and therefore can supply the paperwork, etc., that is needed to qualify for a mortgage. And so the fix is to really come up with a solution that can bank that unbanked, capture that real-world economic behavior on chain, and as a result, open up finance to what was previously considered an unbankable or a financially excluded market. Okay, so the final thing I'll say about our business model before I get into the kind of use of blockchain is, and this is kind of important to understand where the blockchain technology can be used, is to understand what we might mean by rent to own. So the way our financing works is a potential homeowner moves in and pays a fixed monthly rent each month. This is a non-negotiable. In this graph, that would be represented by this purple amount. Now, through our software, they're able to contribute whatever amount they may have access to whenever they do. And once they pay over that minimum rent, that additional money goes towards paying back the home. Once the home is paid back, the house transfers into their name, they then become the owner and they start paying the rent. Now, importantly, whilst there are certain milestones they need to hit, maybe every quarter or every half year or every year, depending on the agreement with the developer and the financier, it's not tracked month by month. It's not that if you miss your payment this month that you're necessarily in default. And here we can see an example of a real tenant, one of the females in our homes. You can see how some months she pays more, some she pays less, some months she even has missed completely. But over the duration of the period, we have kept track of this and we can see that she is ahead on her payments and therefore she isn't in default and she can stay within the home. What's interesting is even though the payments due were around $1,400, she was able to contribute $4,000 over the period and pay back about 25% of the value of the home within 16 months. Again, just show, and we have many, many examples. I will show you some later. Tons of examples of people whose payment profiles look completely unique. Most months, excessive months where they just made their rent, months where they paid more, but over the period, the hustle culture, the informality of income, that income is coming in and they are making their payments and are paying back their homes. And that becomes data that we can use to demonstrate that this model can work. Okay. So I'm sure many of you are sitting and going, it's all very interesting, Greg, and thank you for this background in rent to own affordable housing. This is a blockchain lecture. Where is blockchain involved in all of this? And the core reality of this problem is the housing crisis is fundamentally a data and a trust problem. When we started to go to the market and say to them, these are the realities on the ground of how people earn and how come they don't have access to affordable housing. And here is our proposed financial instrument, this rent to own, that will allow us to address this. Please throw your money at us so we can go ahead and solve this housing problem and unlock what is a massive opportunity, business opportunity around providing affordable alternative mortgages. Crickets. No one was interested. And the reality of that comes down to two fundamental reasons. The first is there is no data in the space and there's no trusted data in the space. Mortgages have been around for hundreds of years. There's hundreds of years worth of data, reliable, audited data that people can look at and say, this is how people pay back their money. their home loans. This is the frequency. This is the level of default. All the data is there for the actuaries and then investments and the VCs and everything to number crunch and decide whether this is a good investment or not. That data doesn't exist in the space. And then, frustratingly, there's a trust problem. Funds get sent, sometimes they're bought from international investors, sometimes for local, and somehow the houses don't get completed, money goes missing. Sometimes it's at a central bank level, sometimes it's at an individual developer's level, sometimes it's not repayment. The system historically is very opaque. And so we kept running into scenarios where investors had said, yes, we've tried this before, but we couldn't keep an eye on what was happening. We didn't know what was happening. 6 months, 12 months, 18 months later, there were some audited financials that came out. It turned out that nothing had been built or nothing had been repaid, and we had lost the entire investment, and there's no appetite left to support these kinds of projects. And data and trust are 100% problems that can be addressed with blockchain. So let's talk first about transparency and the trust deficit. So one of the big issues we often see is that global investors can't see where capital flows or how rental portfolios are performing. So as a result, there's mistrust, there's uncertainty. And through the technology that we've built and through leveraging blockchain, we're able to take the payment records from our tenants. And to be very clear, our tenants aren't paying in blockchain. So this is one interesting challenge we've had to solve. There was no way we were going to get low-income tenants to all of a sudden start paying for their houses in stable coins, either be it international, USDC, USDT, or even a local version of a stable coin. That's just not realistic. So one of the ways we addressed that was to create a system that integrates with the different payment gateways that many of us will be familiar with. If it's in Kenya, it's M-Pesa. In Mozambique, it's also M-Pesa. Otherwise, we'll integrate with somebody like a Paystack. And what we do is as soon as we observe a payment through one of these traditional payment channels, we will then record that payment immediately on chain. And that creates, as you will be familiar with, an immutable record of that payment. So that means, and to be clear, it's anonymized, just to make that very clear. So yeah, I make a payment, we anonymize that record, we record that payment on chain, and our system can obviously de-anonymize it. So there'll be a unique identifier that obviously you would need the system to be able to work out who it belonged to. But as a potential investor, I now have that confidence that at the end of last month, I financed 100 homes. There were 100 payments. This was the value of the payment. I can't see exactly which tenants it was, but I know that I can always de-anonymize it if I need to. And that regular and frequent transparent data gives a lot of reassurance to a potential financier that, hey, the money is being used in the way that it should and is being repaid in the way it is. And importantly, that is being done in near real time, right? Or in real time. Historically, if I was to try and do something similar, just think about it. The payment gets made through M-Pesa. It lands up in my developer's bank account. I'm the financier. I have no line of sight of that bank account necessarily. An auditor needs to come in, needs to check that those payments actually were received. Maybe that those payments were made in cash, that they were actually deposited. There's uncertainty about where those funds flowed. Maybe it takes me 6 months to get some audited financials out. And in those 6 months, who knows? Maybe half the tenants weren't making their payment, and I've been releasing funds and continuing as though everything has been okay without that level of certainty. And that's where things fall apart. So now, by having the data on chain, there's that transparency, and we can track those payments and flag if we're starting to see not enough money come in relative to how much we're expecting from the investment. Okay. So, I spoke about this now briefly, but the kind of traditional audit of a big four firm is going to come in. They're going to look at all the bank statements. They're going to cross-reference all the payments. They're going to link them to all the different individuals. They're going to, ensure this happened and that happened. All of this stuff immediately gets simplified through the use of blockchain. First of all, we can verify the payment at source. The payment happened, right? I know our system is slightly more clunky than if we could use on-chain payments and stablecoin, and we hope to migrate to that. But one of the important lessons is, you have to meet people where they're at when it comes to blockchain. And we have a lot of problems to solve, and taking on the challenge of educating all our tenants to start using a blockchain wallet and make payments on chain and all this stuff is just not a core problem that we need to solve. There are ways to work around it where we can still leverage the advantages of blockchain without having to take on this massive challenge of trying to educate everybody and understand what a seed phrase and a wallet and all that. That's further down the line and maybe even somebody else's problem. So we can verify this at source. The data is immediately accessible. If we have a Swiss investor who is working late on a Thursday night to pull a report, he can or she can immediately see all that data and access it in real time. And of course, it massively reduces the cost of, like I said, having people look at it, having all these auditors, and that's before we start to think of smart contracts and how we can route money based on, certain actions. So that's another big part of what we can leverage. So we can say when those payments come in, once we start to be able to use on-chain stablecoin payments, we can of course route that payment. So we can say for every $10 collected, $2 goes to the funder, $2 goes here, $2 goes there. And again, that reduces the reliance on individuals to have to make those payments. It further protects any investor when they deploy that capital because they know the money is going to go to them as soon as the payment's received. They don't need to work with the developer around their cash flows, etc. And it might sound like a lot of this is for the benefit of the investor, but the important thing to note is if we do not make this an interesting and enticing investment for investors, the capital will not flow and the houses will not get built and people won't have access to affordable homes. And so it is critically important that we try and make it as attractive investment as possible because there's a lot of competing investments out there that are much less risky, or perceived to be much less risky. And that perception of risk is important because the risk is what gets priced, and that's what leads to 22, 24, 27% interest rates on home loans, which is obviously crazy and unaffordable. Okay. So then the next area that we look at is the frictionless movement of capital. And this was really one of the most eye-opening moments for me in this journey. Richard, who's the CEO of Casuel, who you saw in that video, the first time we started working together, he knew little to nothing about blockchain. I don't think he'll mind me saying that. And we were deploying some initial capital to do the first pilot set of homes. And a separate entity was deploying a similar amount also as part of that pilot. Now, us being the blockchain team, decided we were going to use blockchain to send these funds in. There are, at least maybe this has changed now, but I'm 99% sure that there are no registered exchanges in Mozambique. At the time, they definitely weren't. Maybe that's changed now. And so the only way we could get those funds in were to use peer-to-peer. So we identified individuals who were looking for access to cryptocurrency, who had local Metacash, and we did peer-to-peer transactions. In 3 days, the money that we were sending in was in Richard's bank account, and he could use that as part of his project. The other entity sent the money to the Reserve Bank, and it took 6 months for those funds to clear the Reserve Bank. Now, for any of you who operate or run a business, I don't need to tell you what 6 months of delay on the movement of funds does to your business. It can be a death knell. Most small to medium-sized businesses, if they cannot get their money from their supplier within 6 months, that's it. That's the end of their business. So Richard's feedback to us was, if all you do using this new blockchain technology that he had never heard of is move money this quickly, you'd have a business. And I mean, the irony is there's so much more to blockchain than just that, but that is a big consideration. You know, some of us may be using remittance payments. We may know the cost savings. So immediately that's a big one. Sometimes it can be as much as 5 to 7% of every transaction. Can be used by, can be either delayed or can be eaten up in fees. And that delay causes its own set of problems. And those fees obviously increase the cost of doing business. You know, settlement, as you know, happens in seconds on some chains, in minutes in others, with very, very low settlement costs, and that's regardless of transaction size, which in a space like ours, where we're trying to move sometimes substantial amounts of money, really does affect the bottom line. So that also gives another level of certainty to a potential investor that if their money can be deployed quickly, they're not going to be sitting there for 6 months waiting for it to start earning returns, and can be returned more easily. And so this is another area in which we see the kind of use of blockchain has really revolutionized what we're trying to achieve and given us a competitive advantage. And then what you heard in the video was us talking about using NFTs, and that is still something very much we use as part of the project. Depending on the project and the market and the local jurisdiction, we will either use tokens or NFTs, but fundamentally we use them in the same way. So one of the challenges often, again, in this space is when raising capital is, how do you bring some liquidity to the space? How do I, as an investor who wants to support these homes, how do I make sure that if in, for whatever reason, 3, 4, 5, 6, 7 years time, I want to exit my position early, I can. And this is where tokenization becomes really interesting. So ultimately what we will do is we will take a project or a set of projects, we'll bundle those projects together, we'll represent the investment into that in the form of tokens. So we will, let's just say we raise in $1 million, to keep it simple, we might tokenize it as 1 million tokens. Let's just call it the Kenyan Affordable Housing Token. And for every dollar you invested, you would receive 1 token. This then becomes a digital representation of your support that is on blockchain. And now we can do some really smart things because of those tokens that you now hold. We could, for example, use smart contracts to route returns to anyone who holds a token. So we can look on chain and say, anyone who holds a token, based on how many tokens they have, they get a certain amount of the returns that are generated. Importantly, what it can also do is it can also allow the liquidity. So now imagine I have locked up my funds for 10 years into this investment. I need my money out, or portion of my money. That we can create, and we have created, marketplaces where individuals or investors can go, can offer their tokens up for sale, and somebody else who maybe wants to get exposure to the project can then step in and purchase those tokens, giving you a way to exit early. And liquidity is a huge driver, or lack of liquidity is a huge driver in the interest rate. If I'm expected to hold the investment in an emerging market with all the currency risks, with all the political risks in some cases, for a long period, like 10 years, that needs to get baked into the return. If I know that there's a way that I can potentially exit, should I have to, I can definitely lower that perceived risk and therefore lower the return. And a little bit later in the presentation, I'll actually talk to you a bit about a partnership that we've been doing with the Nairobi Securities Exchange to build out a blockchain-based tokenization platform for them to pilot this with some of their local capital providers as well as international capital providers. So very interesting space, and tokenization is becoming, has been for a while, but it's definitely quite tokenization of real world assets is becoming a really topical conversation. People use it in a bunch of different ways. Some like this, all of more kind of serious asset investments, and some a bit more unusual, like Logan Paul, who tokenized the investment into his Pokemon card, which turned out to be a bit scammy, but it was an approach that he went down. So not always used for good. Now, this is not something that we have started to work on yet, because this is a future ambition, but it's definitely something that is part of our roadmap. And that is the idea of zero knowledge proofs and developing something akin to a credit score. Now, one of the challenges that many consumers in emerging markets have, especially if they earn informally, is they have no credit score. Now, the formal economy often runs on credit scores. And you may be somebody who has consistently repaid your rental for the last 10 years, have never gone into debt, have never missed an opportunity, missed a repayment, but you have absolutely no track record of that. And we think that that is a fundamental challenge, and one that prevents you from gaining access to affordable credit elsewhere. Of course, the way that our system is designed, those repayments that you've made, there is a track record of it. There's an immutable, there's a record that could be attributed to your name that, in theory, other financial providers should be able to look at and should give them the confidence that you are creditworthy. Of course, one of the challenges with blockchain is that it is very public, and so we wouldn't want to necessarily put your personal identification details along with your payment details on chain. That's not a good solution for this problem. So one of the things that can be done is a zero knowledge proof, and zero knowledge proofs, put quite simply, is a cryptographic methodology that allows me to store some information in a secure way and allows you to ask questions of that information and have it verify yes or no, or answer a question in a way that you can then make a decision. So, if set up correctly, a car financing company or car dealership could ask the question, has this person regularly made payments of over $500, over $100 a month? Yes or no? Yes. Have they done that for the last 5 years? Yes. In those last 5 years, have they made those payments on time 95% of the time? Yes. That can be enough to make a decision on whether I should provide them car finance or not. I don't necessarily need to know how much you've earned. I don't necessarily need to know how much that payment has made. I don't necessarily need to know which months you did miss or you didn't. There could be a series of questions that I could ask that let me know whether I should move forward or not. When this was first explained to me, the example was given of when you go to a bar or a club and they ask for your ID to verify your age so you know whether you can go in or not to the establishment. It's crazy that you might hand over a card that has your name and your birth date and all this personalized information. And all they really need to know is, are you older than 18? So the zero knowledge proof would allow the bouncer or the club to say, are you over 18? And for the system, in a verified way that can't be influenced, can't be impacted, to say, yes, this person's over 18, and that's enough. They don't need to know my name, they don't need to know my birth date, they don't need to know my address, they don't need to know my height, my weight, they don't need anything, they just need to know I'm over 18. And so something similar could, will be built based on the data that we've collected. And that will start to allow, we hope, our tenants, first of all, we'll encourage our tenants to continue to make their payments on time and all those benefits for us, because now they have a credit score that will be impacted. But beyond that, we hope we'll unlock other opportunities for those same tenants to secure maybe a mobile phone contract instead of having to always use prepaid or pay-as-you-go, to maybe be able to get a car finance at a positive rate, to maybe get a small business loan to help them grow their business. Because all those payments that historically have been hidden, and back to the slides earlier, that data that hasn't been made public now will be made public and accessible to everyone. Okay. So just to kind of summarize how we've made use of it, we've leveraged blockchain, as I've said, to record payments, to leverage smart contracts, to zero knowledge proofs, etc. What's very important, and I think this is always something to keep in mind, is, and I touched on this right at the start of the presentation, that's just the plumbing, as we often like to say. It's just the stuff behind the scenes that allow us to do things more efficiently, more effectively, and in a way that's more appealing to investors. We're not a blockchain business. This is not our reason for existing. We have layers of what would be considered more Web 2, CRM layers, and obviously increasingly using a bit of AI to deliver on some of what we do. So for many of our clients, they're just interacting with a very standard app, or our developers are using a very standard CRM system, not even realizing that behind the scenes, what they're doing is actually being written on chain and recording that data in a way that gives it added value. And I think now, as we move out of the years of meme coins and all these crazy uses of blockchain, I think there's going to be a lot more enterprises that you may not even realize that you're leveraging blockchain technology, but they have made the decision to use blockchain for the benefits that I've just mentioned previously. And I think that that's a positive for the industry. I think we've unfortunately come from a world where people just led with the fact that they were blockchain and the business was almost secondary. That's not a route to sustainability. So I'll touch briefly on our success in Mozambique, and then I'd love to open it up to some questions. So today we've grown the home loan market by 5% in Mozambique. Obviously, that's also a very small number, but we're very proud of the impact that we've had and continue to have. And you saw some of our homes in that video. Of the homes that we've supported, not a single one of the tenants who we have financed qualified for a traditional mortgage. So keep that in mind. Every single tenant who we have supported was turned down for a traditional mortgage because they were deemed not to be able to repay their home loans. Okay. We've had 100% of our monthly rent have been paid, with only about 5% of those being late, but still ultimately paid. After 18 months, after 12 months, we had 20% of the sales price of the home repaid. Again, these are on individuals who were told would not be able to repay a mortgage, yet the numbers outperform a mortgage. We were able to drop the cost of financing by 50%. We're very proud that a significant over 50% of our homes were women-led households, and that our homes, were found to be safer and better built, etc. But that comes down more to our customer than our developer. And this was done in partnership with Mercy Core Ventures, and these results were independently audited by 60 Decibels, and that report is available online. So you don't need to take my word for it. There's independent auditors who've gone in and verified these claims. And then just as I kind of wrap up, because I do want to leave some time for questions. These are those rent to own profiles that I mentioned. As you can see, a reminder, the purple is the rent, the blue is the savings, and as you'll notice, almost no two payments look alike. This person is pretty consistent with an occasional spike, and then they missed a month, but that's okay because they had built up some equity previously. This person was barely keeping it together, to be honest. Making a little bit missing, making a little bit missing, making a little bit missing, and then this massive payment. And the reality of how this person earned was that there was going to be a big payday because of the space, because of their side hustle. They are a health worker, because their side hustle was going to be a big payday. Now they're well ahead. Same here, and these are the realities. This is a shipping agent. When they're working on a project, there's big payments, and when there isn't, there's drops. And so that's the reality. That's the reality of how income's earned. Okay. I had a video, but I'm not going to show it because I think it seems like the videos haven't been shown fantastically. So I'll rather keep going, and I'll rather send you a link. And then finally, just to end off, we were very fortunate in 2024 to have secured an opportunity to build a blockchain-based solution for the Nairobi Securities Exchange. That was initially part of the Ibuka program, but now part of the Innovation Hub. And so there's obviously a lot of Frank Mawiti, who's the CEO. The NSE came in and was really trying to explore how this new technology could help to grow the investment space in Kenya, both for international investment and for local investment, and also for retail. The project itself, we've just got all our smart contracts audited, so we're really getting to the tail end of when we can probably take that pilot live. It is going to start out as a B2B enterprise platform while we test it and understand, what is and what isn't working, and get our education, how we educate, investors around what is possible. But ultimately, it is a platform to raise capital for this affordable housing initiative. I know affordable housing is incredibly topical in Kenya, especially with recent changes to the tax code. So I think there's a lot of motivation to try and supplement the additional money that is coming from the payroll tax with foreign investment, and blockchain could be one of those ways to put investors' mind at ease and get them to contribute more. But just for those who wonder, whether how this becomes a business opportunity, the expectation is there's about $2.5 billion required to begin to address the affordable housing gap in Kenya. There's around a shortfall of 250,000 affordable homes in Kenya, and so this is not a charity or an NGO or nonprofit. This is a impact-focused opportunity, of course, where we can make real impact, but should be financially sustainable for all those involved. And so that's what we were doing in Kenya. I can't remember when this video was taken. I look younger than I do now, so maybe 6 or 7 months ago, maybe a year ago. Okay, I wanted to try to keep the whole thing to around an hour. I know we have an hour and a half together, so keen to find out if there are any questions, and maybe I can talk a bit more about our experience and our leveraging of blockchain.
Thank you so much for that very, very enlightening presentation, Greg. And I know that our students do have questions. I see some hands up, but unfortunately, we need to, because of the number of us that are here, we're 96, we go over 100. We need to only put our questions in the chat feature. So no mics, no open mics. It becomes a little too difficult. So please place your questions. So Greg, there are some questions that are over here. Let me ask you this question. Let me kick off,
Sure.
perhaps. Why Cardano? Why the Cardano network? I mean, I am familiar. We are actually partnered with the Cardano network, by the way, and that's how we got in touch with Empower in the very beginning. But why did you decide, or as an organization, to move forward with that particular network?
Yeah, good question, James. So we made this decision 5 years ago when we started out our project. For some context, there were far fewer blockchains operating at that time. The landscape was very different. Cardano appealed to us at the time fundamentally for 3 reasons. The first one was it had a very big Africa focus at that time. So they had like a CEO in Africa. They were really looking at doing some interesting stuff there, and so that made sense to us. They were at the time one of the cheapest blockchains and to use. And again, we couldn't. At that time, Ethereum was very expensive. Bitcoin didn't have smart contracts, and so we couldn't be in a position where we were paying even tens of dollars to process a transaction on a transaction that could be only $100. Like, that doesn't make any sense. And there was kind of some academic rigor and focus that we thought was quite interesting. What I want to add is there used to be a lot of tribalism in the blockchain space. It used to be everybody has to do everything on our blockchain or else, you're a traitor and everything. Fortunately, we've matured beyond that. And whilst a lot of our tech has been built on Cardano and will continue to be built on Cardano, we'll continue to leverage that. We believe fundamentally that it needs to be a pick the right tool for the challenge. So, I know that Cello, as an example, at one point had quite good traction, I think, in West Africa with their stablecoin, or they definitely do have it in South America. If we were ever to launch in those markets, we'd have to integrate with the Cello network. Base, obviously is also putting a lot of focus, and they have their stablecoin USDC, and that performs very well. And so there's a lot of advantages there. We'll have to integrate with that as well. So I would encourage anyone who is thinking about which project do I start on, to start with. I see I've lost my camera. To start by saying, what do I need from my blockchain? Which one makes the most sense for this? From the community, from the ecosystem, from the tech, etc. But you're not getting married, to it. So if there's a reason to integrate with another, and we're busy doing a lot of that work now, keep an open mind.
Thank you very much. I'll kick off here. I think you can see them.
Yeah, I can go from the top and read them out and
Yeah.
answer to that.
So Dorrington is where we start.
Exactly. So Dorrington, your question, if I can summarize, was around the zero default rate, but in a traditional mortgage, the bank can foreclose on a property, auction it off, regroup that. How does that happen in our rent-to-own model? So we would argue that our model is safer than a traditional mortgage because of the nature of rent-to-own. You, as a tenant who has moved in, has the rights of a tenant, not of a homeowner, until you've paid off the home. So ultimately, what you've signed is a contract that says, I have the right to lease this property with the facility to save towards owning it. But once you complete that payment, then the property transfers into your name. So that's a bit of a fundamental difference. A mortgage, once the deal closes with the seller, the property transfers into your name, and now the bank has a lien on it, and they need to go. If you default and they want to foreclose, they need to come and they need to apply to the courts and they need to get your name off the wall. That's not how our model works. Our model says you are a tenant. If you fall foul of your rental agreement, then like any other tenant, you'll be asked to leave your property, and whatever are the local rules around the person that should follow, you will follow. But ultimately, the home isn't in your name. And so the home will either be held in the name of an SPV between ourselves and the developer or the funder, or each model is slightly different based on the capital provider, but that's how we address it. And if you decide to leave early, for example, there are also remedies where we can then resell that property and you can get that saved equity out and benefit from some of the appreciation of the value. So it's an interesting and somewhat innovative model where you kind of have a bit of a hybrid. You're a tenant in some ways, but you have some stake in the home in others. We found that increases people's willingness to pay off the home quicker. We find people taking much better care of the home, unlike when they're sometimes a tenant, because they know it's theirs, right? There's maintenance, there's upkeep, etc. Because you know it's ultimately going to be yours. So that's how we address it. I hope I've answered that correctly. If not, just type a follow-up and I'll get to it.
I thought that was very clear. Thank you.
Cool. Yeah, I've answered the question once or twice, so I should hope I can get
that was
it right.
very clear. Okay. And the next
So
one.
then the question is, what safeguards are in place to ensure tenants are protected if market conditions or token values fluctuate? So that was really interesting because, the day kind of we did our kind of initial funding and went to market and everything. I think the final week of that roadshow, Russia invaded Ukraine. And for anyone who follows the crypto prices at that time, things tanked. And I mean, they tanked. What was quite interesting was that it didn't impact our tenants at all. In fact, probably many of them didn't even know that the crypto price had tanked because they were making their monthly payments on their rental like they were always doing, and they were paying towards owning their homes, and they were actually somewhat divorced from the realities of blockchain. Because we're a blockchain project and less so a crypto project, what kind of happens when markets and prices fluctuate is our transactions get a little bit cheaper because there's less, you know, that's maybe about it. We're using the tech, you know, and so that hasn't really affected us so much. What it does mean is that prices could be really high and doing fantastically well, and if there's something that impacts the development itself or the country itself, that could impact us. So we have other kinds of risk, but fundamentally, the token is just a representation of the house or the property or the investment. So it's not so much what happens on the crypto market that will influence that. It's what actually it's what anything that would drive that housing market. So a cyclone pulls through, and you know we have had that in Mozambique. Unfortunately, our homes were unaffected, but that could be a concern. There's political uncertainty. That would be a concern. There's a housing bubble that bursts in one of our markets. That would be a concern. But actually, the day-to-day of the crypto price is really inconsequential because our token is linked to the real-world assets on the ground. So we're more worried about what happens to the real-world asset on the ground, and we obviously take steps to protect against that.
And you have quite a few houses that you have engaged in. I think somebody was querying on the number. I don't know. I think you had a diagram in the very beginning there that looked at pre and post. But what is the number that you have currently hit in terms of engagement?
Yeah. So our primary markets are Mozambique and Kenya, and we're kind of, I think, just crossed the 200 homes in Mozambique with Caswell, and then kind of, I think in Kenya it's actually apartments. So obviously each market has its own nuances. So I think there's a couple of hundred apartments that will be managed, in particular within a local partner there called Brown Cap. And then we do some very, very small pilots in Nigeria. You know, we tend to start. The nice thing about this approach as well, because the costs are low, you can start with 2-3 homes, test with the developer. You know, I think what's important to point out, and I didn't go into as much detail because I didn't want to explain our whole business model, but we don't finance the end tenant. That is something we're B2B2C. So we partner with the local developer. We say to them, developer, you have 50 units. You want to sell those 50 units. 10 you sold with cash. 10 you sold with your own little installment plan. 2 got a mortgage, but now you're struggling to sell those last few. Let's work together to offer rent to own. So we will pay a portion of the value of the home to the developer, and then jointly we will collect that rent to own contract, which allows them to then earn the balance and some profit, and ourselves to earn the balance. So the kind of developer gets some of their cash out, finds it easier to sell, and get customers in. So Caswell had been sitting on stock for 18 months prior to us working with him. And those same homes they sold out in 72 hours once they could offer this more affordable financing solution. So we have that kind of B2B to C space. So we have the ultimately the business entity, the developer is responsible for the loan, but we can obviously see how the tenants repay. That's important. So we keep track of that because that's a good predictor. And what we'll typically try and do is also group different in these tokenized investments. It's not all one developer, one project, one location. Like any good real estate investment, you want to have it diversified. So maybe it's different locations, different developers, different countries if we can, so that, yes, if something happens to this developer in Beira, it doesn't mean that the whole investment is a disaster.
Exactly. Thank you. Delphine, I think, is the next one there.
Exactly. So the question is, what is the most significant barrier to entry in Mozambique or anticipated barriers to entry to other countries, including government regulations, to build in those markets, and how are we able to solve them? How do we want the students here to help with their schemes? So regulation is obviously a big challenge. And what I will say, I'm not a fan of the man, but the world for blockchain pre-Trump, this most recent term in post, was very, very different. Definitely not advocating and not in support. I'm just saying his administration has taken a very different point of view on blockchain and has made things easier.
I so agree. I so agree.
Like,
Not that we support him. Let's get that on
I
record.
I never know how to. Yeah, exactly. I never know how to say this with land, like thread in the needle, but regulation has changed, and I do think the cat is somewhat out the bag. And there's enough big institutions and enough big players leveraging blockchain that we're unlikely to go back to the world we were before. So prior to that, it was incredibly difficult and a lot of uncertainty, and that was true for everybody in the space. I can tell you, we work with the World Bank, and when we met with them a couple of years back, they had turned to us and said, we will never leverage blockchain technology in what we do. No, that's not just not. We don't see the value in it. At the end of 2024, beginning of 2025, we were working with a partner on a project where they turned to the partner and said, please ensure that Empower's blockchain technology and their platform is part of your application for funding, because the transparency and the data and everything that it brings is critical to success. So that shows the change. Now, different countries are at different levels. You know, Kenya's just passed its VASP Act. That's really beneficial. That gives a lot of guidance to what can be done. So it will remain a challenge. Again, from our perspective, a lot of what we have to do is make it clear that blockchain and crypto are two very, very different things. You know, there's internet and there's online gambling, and there's other uses of the internet that people, may think is distasteful, but that doesn't mean that the internet itself doesn't add value. You just may think that online gambling should be bad. And so we just try and make that clear with our stakeholders, show them the value of underlying tech, explain why it's just similar to some of the crypto things that are very public, and give it a bad name and kind of go from there. And I think, to bring this back for your own personal experiences, I think that is a challenge you may often run into. And this is where like Web3 and blockchain, all these terms try to become different from crypto. Don't assume when you're speaking to somebody that they know the difference. And sometimes you might need to go, especially if you're talking to a more conservative audience, take the time, differentiate the two, because you will be surprised. You can be months into a conversation and you realize that that wasn't fully understood and it's been slowing down things. And I can tell you that it happens because we've learned that the hard way.
I think Rendani's question is what you have really just answered.
Yeah.
And or addressed clearly. I would suggest that Katiana is a little more nuanced. She's looking at inclusivity. Is that something maybe we can look at?
Sure. Okay,
Sorry, Rendani.
Yeah, I'll come back to Rendani. So she said, thank you for the insight conversation. Pleasure. I'd like to ask, considering Power's work in emerging markets, how can blockchain-based housing finance model balance technology innovation with the need for inclusivity and affordability for low-income communities? Okay, so I mean, that's our main motivator, right? So we're an impact-led business. What we realized is charity only gets you so far. If you rely on people's their good heart and their goodwill, it dries up whenever things change, right? The billionaire can feel a lot less poor, I mean, even though they're not, and all of a sudden their funding gets cut. So we need to make financially sustainable businesses. Where we find blockchain can really support this is by, first of all, making those cost reductions. So we spoke about the cost to send capital, the cost to audit, the cost to, move money and replace it with smart contracts. All those little cost savings can either get retained as profit or can get passed on. And so, we look to pass that on. That's why our home loans in Mozambique are at 10% as opposed to 27%. That's not only because of cost savings. It's not like the 17% is, was all costs, but there was some of it. And there was like the access to data, blended capital, all of those things, but ultimately trying to drive down the costs. So, but the other side of it, the inclusivity, is, one of the amazing things about Africa is we leapfrog technology. So sometimes, because things take a while to get to the continent, the stuff that was kind of an okay middle step, we don't get it, we just get to the better thing. I think often about like mobile connection. Many people went from almost no internet or very bad internet, skipped fiber, skipped everything straight to mobile network, and maybe even to Starlink, if you have that available in your country. And so blockchain allows us to say, okay, because we have these fundamental problems around, money settling, the time that it takes, the challenges on setting up bank loans, why has M-Pesa been so successful? It's because there was a real world challenge of sending money across the country. M-Pesa stepped in, but M-Pesa is very expensive for what it is. There are cheap alternatives available in blockchain, or there could be cheaper alternatives available with blockchain, and there could be similar alternatives that we can roll out globally. So I think it starts to allow people who maybe aren't near a bank, don't have the necessary paperwork, historically wouldn't have been able to accept anything other than a cash payment, to now create a wallet, to transact online, get paid online, use that money to engage in the global economy and unlock opportunities. So, if I'm sitting somewhere more rural, I don't have the paperwork to set up a bank account. I can't set up a Stripe account or some payment provider, but I want to start offering my services in the global gig economy, in anything, as a call center agent, working remotely, whatever it might be. Now, all of a sudden, I can get those payments in a way that is actually globally useful. And I think that that's what we should be looking at. How do we do that? And then how do we recognize that in a way that allows that person to be moved much more into the formal economy and benefit from the things that, a lot of us just take for granted, or at least those. I was blown away when I moved here to the Netherlands. Payments clear instantaneously. In South Africa, that's not the case. Yes, if it's the same bank, and yes, if you pay a fee, but it's just standard that if I pay James, if I pay you for my bank account, it will just appear in your bank account immediately. That's not how it is in South Africa. So, okay. Just going back to Ndani's question, now that you have real use cases backed by data, what are the biggest barriers to scaling and power across multiple countries, technology, regulation, capital, and execution? Capital, right? You can have a great story and you can have some data, but there's always still some mistrust. There's no denying that that's always a problem. And a lot of education. Education is a big one, right? I think sometimes you can get caught in your echo chamber because we all understand blockchain and we also understand the value, and all of you on this course are paying money and allocating time to learning about the technology, that it's very obvious to you, the advantages, but really you got to be patient, a lot of hand holding, a lot of working with regulators, a lot of discussing, getting sandbox environments to test and try things. So it's patience, right? Things don't move as quickly. And that's something we've struggled with because we're still an early stage, I suppose you'd say startup. In 5 years, but still startup. So we want to move at the speed of a startup, but our clients are big institutions and they want to move at the speed of big institutions. So that can always sometimes be a challenge. But we see every house that we do builds the credibility, builds the trust, every set of data. And we had 3 homes and 30, and we had 100, and we had 200, and we had 300. It's a journey, right? We often say join our journey.
Absolutely.
Joseph, you said, what is the role of blockchain in overcoming affordable housing challenges in developing markets? I think we've covered that. There's a video that I didn't show that I will include that might be useful. And then somebody's pulled up.
If I may also add, this is recorded, so the recordings will be made available in case you came in late and you did not catch part of what was already delivered.
Yeah.
Sorry, great. Go ahead.
Cool. Sylvester's pulled up our Catalyst proposal, which, you catch us at a very exciting time. We have developed that platform. The platform is complete. Our smart contracts had to go for auditing. Fortunately, there was nothing major unearthed, but some small tweaks and improvements. So we're now in the final sign-off phases, and then we have our first project in Kenya that we'd like to tokenize. And again, it's about tokenizing that project, getting some data on how those homes have performed, using that as part of a roadshow for the next project, etc. So we expect to have around somewhere between $700 and $1 million worth of housing tokenized in that first project, and then use that as the, hey guys, this is how it works. It was somewhat delayed in Kenya because of the VASP Act, which was debated for quite a long time in Kenya, but then passed in November, if I'm not mistaken. So that gave some pretty clear guidelines on the, like, how do you do this without landing up in jail, which is important if you want to run a credible business. Then there's a question around, can this model be rolled out to Nigeria? Yeah, we are looking at Nigeria. I was in Abuja actually last year talking to some partners there. The co-op model is interesting there. So obviously looking at how we can leverage those existing relationships and trusts and stakeholders, etc. So yeah, I would say probably Mozambique is our OG market where we started. Kenya is probably our one that we focus on right now with a lot of opportunity, and Nigeria is kind of in the pipeline. But we're also looking at opportunities in Rwanda. We're also looking at opportunities in Botswana. It's another one. Yeah, frustratingly, this is a problem that exists pretty much across the continent. So name a country and you could probably find a dysfunctional affordable housing market. Yeah. So Africa actually is probably, even though both myself and Glenn are South Africans, are probably the market that we're not as focused on, because that does have comparatively quite a good mortgage market actually. So there's other places where there's a big opportunity. Okay, Joseph, from my end, are there challenges of using blockchain in housing? If yes, what are the challenges? Yes, absolutely. So the biggest problem with using blockchain in housing is everyone in blockchain has been trained to think of things in crypto speed. And crypto speed is like pump and dumps, like 1,000% returns, like everything's like happens like 24/7, no holidays, kind of the whole hustler grinder, crypto ecosystem space, and housing is slow. Housing is slow. Housing is relatively boring. I mean, even if you think about it in traditional equity terms, the housing part of your portfolio is that small subset that's not going to go up 30% in the year, but you go up 5% and it'll pay you a good return, and it like offsets your typical equity investment. So housing's already seen as slow compared to equity, and our equity is seen as slow compared to crypto. And so sometimes when we kind of sometimes fall in an uncomfortable place where the housing sector looks at us as these crazy crypto bros, even though we're not. And the crypto sector sees us as these kind of slow housing people. And so that can be a challenge. Of course, we're overcoming that, and we're building a community of people who realize that there is value to having the crazy meme coin part of your portfolio offset by like some kind of sensible, logical product offerings, but it can make it a challenge. And yeah, it's just the reality of where we are as an industry. Okay, somebody's here about okay, so if you want to know how you follow up with me afterwards, I'm pretty easy to get hold of. So I don't know if my email address will be shared as part of this, but you're welcome to go into our Empower site and there'll be a contact, and that will make its way to me. You can send us a message on Twitter and the social media team will redirect that to me. You could probably find me on Twitter. You could go to Telegram and comment in our chat, and that will also find its way to me. Discord. Basically reach out to any of the Empower platforms, and John from our team will let you know you're looking for me, and we can connect and have a call and find out what you got planned in Nigeria. Do we think blockchain can become a standard tool for finance and affordable housing in Redbox within the next decade? I hope so. Like, I mean, I'm not the oldest person in the team, but I'm not getting any younger. So I think if we can prove this, I'm not expecting we're going to replace the mortgage or replace the kind of installment sale, but I think we can become a really viable alternative that gains traction. And look, if I'm honest, as we prove this works, people will copy us, and that's okay. You know, there's a estimated backlog of 50 million affordable houses across the continent. There's no way any one business is going to be able to address all of that. So, you know, if there's going to be some copycats, as long as we're all working towards the same goal of getting people into climate sustainable, affordable housing, then that will be a good outcome. What characteristics of the housing market in Kenya make it suitable to employ the blockchain solution? So Kenya's a great market. I mean, obviously, this vast opportunity, was kind of a real one. The fact that so much of your payments are already happening through M-Pesa, already digitized. There's other markets where it's very cash driven, much harder to take a cash payment and find a way to put that on chain. It's much easier to look at an M-Pesa transaction and replicate that and record that on chain. So that's interesting. Kenya is a relatively wealthy country by continent standards, but has a really dysfunctional mortgage market, which is unusual. So I think, let's say, for example, you needed $1,000 to qualify for a mortgage, or $500 to qualify for a mortgage. I'm not sure what the appropriate amount is. All of us know people in Kenya who, across their multiple roles, because Kenyans often have multiple opportunities and side hustles and everything, are earning that. We know it. Like, I'm sure there's some of you on this call. I'm sure you have uncles and brothers and cousins and sisters and friends who, through all their different things, are earning enough to qualify for mortgage, but it's not formal. And that whole segment of the Kenyan economy is just not having access to affordable housing. And that's not it's not like a risky person to provide funding to. They may have been earning that income for years and years and years and years and years and years and years. In fact, maybe I drank too much of the Kool-Aid, but I have seen lots of people formerly employed by big global corporates who come to work on a Monday, scan their badge, and they've been retrenched because the company missed its earnings made $30 billion, but didn't make $33 billion. So now they're going to go and retrench 5,000 people, and now they're completely without an income. People with multiple sources of income, one could even argue, might be slightly more resilient in a job market that's ever changing. Okay, that's people being saying.
I think we have one more question.
Yeah, I can.
We can take here. Delphine's been asking this question over and over.
Oh, sorry, Delphine. Oh, yeah. How do you want the students here to help with your scheme, or what role do you want us to play in? Brilliant. What a great way to end. So, look.
Yes.
First of all, Delphine, the really nice thing about today's presentation is it seems talking to a high percentage of you, are based across the African continent and probably have way better insights into the local challenges. I don't profess to be an expert of every country. Africa is a very diverse place with its own set of problems. I just kind of know the markets we've been focused on. So if you think that your market is one that has similar problems and similar challenges, first of all, it'd just be great to connect and jump on a call and just hear your own lived experience and know about that. The next would be, if you know people who are in the space, whether they be developers, whether they be financiers, whether they be institutions that you think could be interested in this, connect us. We love having these conversations. These conversations can sometimes take a long time, unfortunately. So, starting them now helps us to build our pipeline for next year, even if that's as long as it takes. And then the final thing I'll say is, you're also all very interested in blockchain. And so you may, again, be kind of circulating within crowds of people who are looking to take on blockchain kinds of projects like this, or maybe operate in the space, or maybe you've networked to somebody who you think could be relevant. Feel free to connect us. And we love to either just learn from other people or explore opportunities, or maybe there's people who are doing interesting stuff with digital banks or alternatives to digital banks. That's an interesting contact to have. So I suppose hopefully you've got a good understanding of what we're trying to do. Hopefully it's giving you some food for thought. In return, if you keep us in mind, and if you think there's something we can learn, I could learn from you, or our team could learn from you, reach out. We want to hear about it. Or if you bump into people who you think there could be value, please connect us. There's not a lot of people doing stuff in the space, so the more we can grow our own network, the better. Yeah. Wow. Okay. Yeah, we were right on. Good thing I left so much time for questions, and thank you for everyone for being so engaging. Sometimes you end these things and it's like crickets, but that's not been the case here.
No, but thank you so much, Greg. Incredible insight. You've hit a couple of really key points there, and I just wanted to give a little vote of thanks on that, especially because of what you mentioned. It cannot be done by one organization. There's a big challenge, and these challenges can only be done if it's a concerted effort. And
Yeah.
I think you just never know how much what each one of us can do. So I think that what you have said there will be taken very much to heart. We'll be discussing. We are in the blockchain space. We recognize, as you also indicated very correctly, that blockchain and separating it from crypto, separating it from Bitcoin and all these other distractors will most likely be working in the background without people's knowledge.
Yeah.
And already is at Web3 and so on as we are studying. So we really do feel that it's empowering, no pun intended there perhaps, to have you here from Empower.
Sure.
And I truly want everybody to just indicate their thanks in the chat feature so I can share. And if you have one or two words, you can say you're welcome to do that. But again, thank you so much. This was truly, truly, truly wonderful. We've been working with Empower from, it's been at least 4 years, I know.
Oh, yeah,
And,
sure,
and one of
absolutely.
the things, one of the things we've been trying to do is bring know-how, because it is a complicated space whereby people just dismiss it because they don't have the time or feel inclined to want to know, well, what is an NFT and what do you mean blockchain? You mean Bitcoin? Forget about it. So we try and make sure that we bring this know-how to the light. And again, it's directly in line with what you're doing. So thank you so much. We've been engaged with Cardano, especially because of what you mentioned, the fact that they're Africa focused. And O'Connor, we were in touch with him.
Yeah, of course.
Been working with him quite a bit, and we've had discussions with him and so on. And we do Plutus Haskell. We teach courses in Plutus. In Haskell, the programming language on the platform, as well, because of, and we have a very, very active and very big cohort that is Cardano focused. Just want to also emphasize that. So we understand why this ecosystem is also key. But it is so interesting, and I know that the students here will echo the fact that there's much to do, and it begins with us.
Absolutely. Well, yeah, thank you. I'll share my presentation along with that video so you can have a relook. And there was a second video as well that I didn't show, but I think our time was better used with questions. So I'll keep everyone up to date with how we go. And
absolutely,
I hope to have some students in an Empower home.
Yes, you never know.
That would be a great full circle moment.
That would be a full circle. We work with a capital markets authority. We work with them very closely in terms of AML, KYC courses, not to do with blockchain, but we're very keen to try and see if we can pick up the conversation with them, especially to try and bring it together. Because anything that because I understand that you don't operate as a security because of that fine line. You don't want to, but clearly clearly there's much that we can do. Thank you so much, Greg.
Thanks, everybody.
I think we've taken up enough of your time.
My pleasure.
And we really do appreciate. Well, if you don't mind, we'll be sharing this video with beyond and above and all over the place. Because again, it's how we want to create that empowerment.
Excellent. Thanks, everybody. Thanks for your time. Have a great evening.
Thank you. Thank you very much. Bye.